Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday the 2nd of April 2023, and we're looking at what happened to gold and silver prices last week, where we saw silver actually rise quite considerably for 3 weeks in a row, and what we envisage is going to happen this coming week. Now, this is a repeat of our weekly update, which was published yesterday, so if you've listened to that, no need to listen any further. If not, please enjoy. Now, before we take a look as to what happened last week, just a quick reminder that we have set up a second channel entitled Finances Do Matter, where we will be covering all aspects of finance and investment, and of course the latest banking news. Now, if you haven't subscribed and wish to do so, we've placed a link in both the description box below as well as in the comments section. Please do try it out, even if it is for curiosity's sake and nothing else. We will be conducting interviews when we reach 10,000 subscribers, and so the quicker we get to that level, the greater the value we can offer. We've also placed below a link to our gold and silver 2023 forecast. Might be worth listening to that again as well. Now, what happened this past week? Well, gold fell $9. It was looking quite good at one stage, but it was also looking quite poorly at another, falling from $1,979 to $1,970, having been as high as $1,988 and as low as $1,945, a fall of just 0.5%, similar to the previous week. In sterling terms, it was down £21, just shy of £1,600, and in euros, it closed at 1,817 euros. That's down 22 euros. Gosh, do you remember the days when gold was as low as $1,100? I actually remember them when it was $200. That's when I started to show an interest in the price of gold. Seriously. Silver rose 87 cents, now providing 3 consecutive weeks of rises, rising from $23.25 to $24.12, having hit a high of $24.46 and a low of $22.84, a rise of 3.75%. In sterling terms, silver closed at £19.58, that's up 55 pence, and in euros it closed at 22.27 euros, that's up 0.63 euros. Of course, the gold to silver ratio has fallen, and it's come down quite a bit from 85 to 1 to 81.7 to 1. Now, the difference between gold's high and low for the week was just $43. Not a great deal, but the difference between silver's high and low was $1.62. Very similar to last week's of $1.56, both of which were slightly lower than the previous week to that of $2.17. Now, our forecast last week, we said we expected gold to trade between $19.30 and $20.30, which is what it did comfortably. And we envisaged silver trading between 22 and 24, with 21 to 25 as outliers. It traded all week between 22 and 24, but just went marginally above 24 on Friday. Now, looking at other financials briefly, Bitcoin stands at $28,569. That's just shy of a $1,000 increase on the week. Equities were considerably higher. The Dow Jones up 1,037 points at 33,274. The S&P 500 up 139 at 4,109. And the Nasdaq Composite up 398 points at 12,221. We'll mention why these rose in a moment. Oils were also higher. Brent crude closed at $79.77, unfortunately up very close to $5, $4.78. And WTI crude closed at $75.67. That's up $6.43 on the week. The dollar index stands at 102.51, though it had been lower, down 0.60 points on the week. So, as far as economic data was concerned, all eyes were really on the PCE figures announced on Friday. Now, we did have positive consumer confidence figures announced on Tuesday, 4 points higher than anticipated, and initial jobless claims were 7,000 higher for the week, marginally above expectations. However, what boosted equity markets and cryptos and precious metals on Friday were the PCE figures. Yes, the PCE index, or another term for inflation, for February came in at 0.3%, and that compares with 0.6% for January, and the core PCE index came in at the same rate. This now brings down the annual PCE rate to 5%, compared with 5.3%, and the annual core PCE is down from 4.7% to 4.6%. So immediately this resulted in headlines such as inflation softens in February and takes pressure off the Fed, or high US inflation is easing. And a number of Fed officials have signaled that they plan to raise rates one more time before pausing. And we've got something like a 52% of economists currently think rates will go up by 0.25% in May, and the remainder thinking the government, or the FOMC rather, will pause. So, with the next FOMC meeting not due until the 2nd and 3rd of May, there's some time before interest rates can be increased again, unless there's an emergency, of course. And this has and will give markets some breathing space and, frankly, time for optimism during that intervening period. Now, this coming week, there is quite a lot of US data being announced, including manufacturing PMIs on Monday, factory orders on Tuesday, the ADP employment report on Wednesday, and services PMIs, and then the US employment report on non-farm payrolls on Friday. That's the important one, including the unemployment rate plus average hourly wages and also consumer credit figures for February. Now, if these figures tend to support that the Fed's raising of rates is having the desired effect on the economy, we can very well see equities being boosted again, and precious metals too, especially as it could potentially soften the dollar further. Now, going back to the gold price, even though it was slightly down for the week, it's had the best month in approximately 3 years, amid a growing risk of further banking turmoil, a looming credit crunch, and rising hopes of a Fed pivot. All of these may indeed be sufficient to boost gold higher, and silver too. Silver has seen this past month trade as low as $20 and as high as $24.46, which it hit on Friday. There's strong resistance at $25 and very strong support at $20. However, if all works in favor of silver, it could potentially attempt to reach $26 again, though we cannot see it rise above that until we're pretty confident of a Fed pivot on interest rates. Some technical analysts believe silver is currently overbought, but for the moment it's riding the crest of a wave, and that wave may continue a little longer. With interest rates now fixed broadly until the 3rd of May, more external factors are likely to influence price, though the jobs report this week could indeed have some impact. Now, whilst our view is that silver is a little overbought, we would not be surprised to see a continuation of momentum for a little while longer. The concern for silver is, though, if we are heading for a recession because of a credit crunch, any euphoria may be short-lived should industrial demand fall, but that doesn't appear to have happened significantly so far. So this coming week we're going to be mildly bullish, depending on the economic figures, of course, being announced, and we see gold trading between $1,925 and $2,000, with $1,900 to $2,025 as outliers. And we see silver trading between $23 and $25, with $22.50 and $25.75 as outliers. Now, before we go, just a quick reminder that we have placed our 2023 gold and silver price forecast link in the description box below, as well as a link to join our Finances Do Matter channel, which we, once again, strongly encourage you to do. Meanwhile, thank you so much for listening. Please give this video a thumbs up and subscribe, and also nip over to Finances Do Matter and subscribe over there. And until we meet again, Have a great weekend, a safe weekend, and prosperous week ahead.